Dear students, today we are going to study the accountancy portion, preparation of journal entries. This is a fresh class for those who studying accounting. Accounting is a new subject for those who join +1 classes. So dear students, please study the fundamentals of accounting. The first fundamental of accounting is preparation of journal entry. Then, what is the meaning of journal? Journal means daily. The day-to-day transactions are recorded in the first time is called as journal. The day-to-day transactions are recorded first time in the books of account is called as journal. So, journal is the book of original entries. Original entries. So, +1 accountancy preparation journal is the first step in the accounting process. So, what is the meaning of journal? Journal means day, or we can tell daily. The day-to-day transactions are recorded first time is called as journal. It is also called as a book of original entries. Dear students, please buy one accounting notebook. One accounting notebook you will buy in the shop and study these questions. The accountancy book contains these columns are in the printed form. So please watch these columns and buy one accountancy notebook. First date column, particulars, debit, credit. So these 5 columns are given 1, 2, 3, 4, 5. These 5 columns are already drawn in the notebook. So try to buy one accountancy notebook and takes the notes and study the portions one by one. This is the format for journal. Date, first column is date column, second column particulars column, third column ledger folio, this column is debit column and this column is credit column. So dear students, buy one accountancy notebook and study the journal. Next class onwards, you will write the details in the accountancy notebook. Then please listen the class. Journal entries. Then before studying the journal entries, we have to know some basic principles, some technical points we study one by one. First point is, what is the meaning of transaction? Transaction. These are the new words we are going to study for the last 10th standard, up to 10th standard. You never use these types of words. From +1 accountancy group students normally study these technical terms. What is the meaning of transaction? Transaction means transfer of money, or money's worth from one person to another person is called as journal. It is called as transaction. Transaction means transfer of money or money's worth from one person to another person is called as a transaction. The transactions are classified into 3. Number 1, cash transaction. Number 2, bank transaction. And number 3, credit transaction. These are all the 3 types of transaction. So basic point is, what is the meaning of transaction? Transaction means transfer of money or money's worth from one person to another person is called as a transaction. The transactions are in three types. Number one, cash transaction. Number two, bank transaction. And number three, credit transaction. What is the meaning of cash transaction? When cash is immediately involved, when cash is immediately involved in any transaction, it is called as a cash transaction. Cash transaction means cash is paid or received immediately. It is called as a cash transaction. If bank transaction, if bank is involved, it is called as a bank transaction. Then what is a credit transaction? When settlement is made, not immediately but later, the receipts or payment is made later. The settlement of receipts or payment is made later. It is called as a credit transaction. Once again, I explained these are new terms for those who joined +1 class. So please thoroughly listen the class. Otherwise, you are not able to follow this class. So you thoroughly, carefully listen the class. Transaction, transfer of money or money's worth from one person to another person, it is called as a transaction. Transfer of money from one person to another person is called as a transaction. Then there are three types of transaction: cash transaction, bank transaction, and credit transaction. When cash is immediately involved, it is called as a cash transaction. That means receipts or payment is made immediately, it is called as a cash transaction. Bank transaction means if bank is involved in any transaction, it is called as a bank transaction. Credit transaction, when settlement is made future, that means receipts or payment is not paid immediately. If it is paid immediately, it is a cash transaction. It is not paid immediately, but the payment or receipts are made in future, it is called as a credit transaction. So three transactions, very important: cash transaction, bank transaction, credit transaction. Transfer of money or money's worth from one person to another person is called as a transaction. I explain only one word, transaction. The same word will comes to our entire life, transaction. Transfer of money or money's worth from one person to another person, it is called as a transaction. There are three types of transaction: cash transaction, bank transaction, credit transaction. When the cash is paid or received immediately, it is called as a cash transaction. If bank is involved in any transaction, it is called as a bank transaction. If cash is not paid immediately, but the receipts or payment is made later, it is called as a credit transaction. Then we are writing the journal entry in traditional approach. Traditional approach. In traditional approach of journal, two aspects of a transaction are recorded. Number one, debit aspect, and number two, credit aspect. In every transaction, if debit and credit is involved in any aspects, in any transaction, it is called as two aspects of a transaction. It is also called as a traditional approach. It is also considered as a double entry system of bookkeeping. Double entry system. These are all the new terms for you. So please listen the class. Transaction, transfer of money or money's worth from one person to another person. One person is received, another person is gives. Sometimes some comes in, goes out. It may be income or expenses. So every transaction has two aspects. It is called as a traditional approach of preparing journal. We are following the traditional approach of journal. Then here we study the next portion. I explain only one word, that is transaction. Each transaction has two aspects. One is debit aspects and another one is credit aspects. If all the transaction affects two accounts, it is called as the double entry system of bookkeeping. Then we study what are the different types of account. The accounts are classified into three types. In our textbook, only two types is given, but the second, personal account, impersonal account, impersonal consists of two accounts. So, on theory portion you will study that manner. Now we study the accounts are classified into three types. Number one, personal account. A bar C is abbreviation for account, personal account. Number two, real account. Number three, nominal account. So, accounts are classified into three: personal account, real account, nominal account. An account explains about the person. The account related to person is called personal account. The account related with the assets or properties, it is called as a real account. An account explains about the income or expenditure, it is called as a nominal account. So totally we have three types of account: personal account, real account and nominal account. Each account is having separate rules. So this rules is called as golden rule of accounting. Golden rules for accounting. Dear students, please take the notes for this area. What are the three golden rules of accounting? There are three types of account: personal account, real account and nominal account. Each account is having two sides. One is debit side, another one is credit side. Real account has one debit side and credit side. Nominal account has debit side and credit side. So the rule of the personal account is debit the receiver, credit the giver. The rule of the real account is debit what comes in, credit what goes out. The rule of the nominal account is debit all expenses or losses, credit all incomes or gain. These are the three golden rules of accounting. Dear students, I just complete up to this stage. Once again, I explain what we studied. Now, what is studied in this class is the first class for those who studying accounting. So, In the first class, I explained only 3 golden rules of accounting. Whether you understand or not, you simply memorize these 3 columns. In the personal account, debit the receiver, credit the giver. The rule of the real account is debit what comes in, credit what goes out. The rule of a normal account is debit all expenses or losses, credit all incomes or gain. These 3 golden rules. It is just like a formula. In mathematics, you studied about formulas. But in accountancy, the same formula is considered as the rules of accounting. So, dear students, this is the first class. So, in the first class, you just memorized what are the golden rules in accounting. I just explained there are 3 types of account. Number 1 is personal account. Number 2 is real account. Number 3 is normal account. I am telling the same words again and again. There are 3 types of account. Number 1 personal account. Number 2 real account. Number 3 normal account. There are 3 accounts. Each accounting is having its own rule. The rule of the personal account is debit the receiver, credit the giver. The rule of the real account is debit what comes in, credit what goes out. The rule of a normal account is debit all expenses or losses, credit all incomes or gain. Then once again explain what is the meaning of personal account. Any account which is related to person. The person can be a receiver or giver. So the rule of the personal account is debit the receiver, credit the giver. The account which is related to person is called as a personal account. The account which is related to assets or properties, it is called as a real account. Debit what comes in, credit what goes out. The rule of a normal account is debit all expenses or losses, credit all incomes or gain. So normal account means the account which explains about the income or expenditure. We will study the remaining portion in the next class. Now we just memorize these 3 rules. What are the golden rules in accounting? Then I just explain only one word, transaction. Transaction means the transfer of money or money's worth from one person to another person is called as a transaction. So the persons are involved, the banks are involved, assets also comes to one person and also the same asset goes to other person. One may be an income to one person and expenditure to another person. These are all the procedures for preparing the journal entries. So if you are thorough about this portion, then only we will prepare the journal entries. Then dear students, next class onwards, we will study the remaining question one by one. First 10 transaction journal entries we have to write one by one. Dear students, please buy the textbook and takes the note in accountancy notebook and prepare the journal entries. God bless you.